How's it going, everyone? Yoso back here with another video, and I hope you're having an amazing week so far. Today I want to talk to you guys about something special, and that is a little bit of financial advice. And I am not a financial advisor, just so that you know, but this is stuff that I think is really, really important that everybody should know about when they go to buy a car. And so today we're going to talk about, should you finance a car or should you pay cash? And I think this is something that a lot of people think about, and it's something that has definitely crossed my mind a lot, and it's something that has taken me a lot of time to really think about in terms of all the ideas that I think are really important to go through when you're going through that decision. So today might be a little bit of a longer video, and it may be a little more complex and technical than some of my other stuff, but I think it's really important to know about this stuff just so that you make the right financial decision for yourself when you go to purchase a vehicle. So if you like, this is probably a good time to go take out a pen and paper. You may want to take some notes down on this because it can help you not just with buying a car, but some of your other financial decisions as you go forward. And some of this stuff is just general good life advice for any other scenario that you may come across. So there are a few terms that I want to cover, and let's just define them really quickly before we get in. Okay, so the terms that we want to cover today are interest, inflation, opportunity cost, and credit score. So we'll talk a little bit about those, and then we'll get into the idea of why this is all really important for our decision about why you should finance a car or pay cash. So let's take interest, for example. That's the first one. Now, interest is a really interesting topic because when you buy a car, a lot of times you see it advertised some percent APR, go finance this car, or lease this car at this rate APR. And what that really means is when you're going to buy the car and you're using the bank's money to either finance or lease the car, then the bank is taking a little bit of money just to give you that money in return. And so what you're doing effectively is paying a fee for using that money, and they're taking on the risk by assuming that you're going to pay off that car or you're going to make your payments on time. And so they want to make sure that they're covered, and they're going to take that money that you're now paying them as a way to make money off of that money they've given you. So interest rate is something that we sort of think about in lots of ways. When you go to the bank and pay a credit card and you have a balance, there's an interest rate there, or you have a bank that requires a fee. You know, all these things are types of interest that you could be paying, and the same thing goes with buying a car. Now, sometimes you'll find it's advertised that you've got 0% interest, and in that case, that's fantastic because it doesn't cost you anything to borrow that money. And that means that whether you have the money sitting in your bank or you use the bank's money, it's basically the same thing in terms of the cost that you would have otherwise paid in interest. So that's something that's important to keep in mind, but interest also goes the other way. If you have your money and you save it and you put it in a bank account that has a high interest savings rate, that could mean that when you put your money in that account, the bank is now going to give you money for giving them the money. When you put your money in a bank account, the bank doesn't just leave it there. They take the money, they invest it, they make money off of it. And so they are giving you a percentage in return for letting them have access to your money. And the same thing goes with any other type of investment. If you buy a house, you invest in a stock, things like that, you can get a return on that. And so that can be thought of as interest. And so that's something that I want you to consider and is important for our conversation today. We're going to talk about that in a little more detail as we go on, but interest is something that is really, really important to consider when you're buying a car. All right, the next topic that we need to talk about here, or term that we need to define, is opportunity cost. Now, this is something that I think is not just applicable for buying a car. This is really important for all aspects of life. Now, when I was in university, I took an introduction to accounting class, not because I love accounting, but it was part of my degree and I needed to pass it. So when I took that class, the first lesson that we had going in there, I'll never forget it, was about opportunity cost. And it's something that has stuck with me forever. And every time I need to make a decision about something, I think about opportunity cost. Now, what is opportunity cost? Opportunity cost is the cost of making a decision to do one thing instead of the other. So if you're buying the car and you're spending the money on that vehicle, how much is that costing you versus if you would have taken that money, put it somewhere else? So if you spend the money on a car, you can't now use that money for something else. And if that other thing would have been more valuable to you, that is a cost to you. It could be a physical cost, meaning it's costing you more money to do that, or it could be a cost in terms of your time or the ability to access something that you really care about or something that's valuable to you in terms of an experience. So when you're thinking about a car, we need to think about that money that we're going to spend either as a down payment or paying cash for the car. How much value does that money have towards getting this car versus using that money for something else like an investment or paying for something else or buying something else that would be important to you. But it's also important for anything else in life. If you're going to spend your time watching TV instead of working out or playing with your kids or going out to do groceries or spending more time doing something else that you love, there is an opportunity cost for sitting in front of the TV. You're not going to be able to do that other thing. And in a lot of cases, people always say, hey, I don't have time for doing this. We do in a lot of cases. We just need to figure out what is really important, what are our priorities. And so whenever we make a decision to do something, there's an opportunity cost associated with it. So it's just something to keep in mind, little life lesson that I'm going to throw out there that also has to do with buying a car. Now, the next term that we need to talk about is inflation. Inflation is the relative cost of goods compared to the value of your money. Now, what that means in simple terms is if you have $1 today and you go and buy something, it's worth whatever it is today. But in 10 years down the road, in 5 years down the road, that dollar may not be able to buy you the same value of that thing. So your dollar doesn't go the same distance as it did before. And so inflation is a really important thing to think about, because when you want to spend your money, you need to think, how much is that money worth to me today versus if I leave it in the bank and it doesn't grow, or if I put it in a high interest savings account or something like that and it grows, right? Now, is that something that I need to consider in terms of, should I spend the money today, keep it in the bank and get some growth somewhere, or how much is it going to cost me to buy the car 5 years down the road versus buying it now? So inflation is something that not a lot of people think about, but it could factor into your decision with buying a car. Cars today are not the same price as they were 10 years ago. And so that means that cars today are not going to be the same as they will be in 10 years from now or in 5 years from now. So if you're planning on buying a car, sometimes you may want to think about, should I keep the current car for a little bit longer, or should I sell it and buy another car today and use the money that I know costs the same amount to buy this car now versus in 5 years from now when I don't know how much that car is going to cost me. And my dollar may not go the same distance as it will today. We'll talk a little bit about that in a bit more detail as we go on today, but just something to keep in mind. The last factor in this whole conversation is credit score. Now, this is really important because if you have good credit, that means that you can have much more buying power. Banks are a lot more willing to give you a loan, and a bigger loan, if you have a good credit score. So it's really important to think about, what's my credit score today? How much of a loan do I think I can get? And what interest rate can I get? Versus if you don't have a good credit score, maybe you want to improve that credit before you go and finance a car. Or maybe that means let's go buy a car cash. Or if you don't have good credit, maybe it's a good opportunity to buy a car that I can afford and finance it, make those payments on time, and increase my credit score, because the banks now know that I am a reliable person to lend money to. So we'll talk a little bit about that as well as we go on in our conversation today. But those are the sort of main, we'll call it criteria, factors, definitions that we need to cover before we really get into our conversation today. So here we go. Again, we talked about the credit score, and I'm going to use that sort of as the first piece going into it, as well as the interest. So if you have a good credit score, again, you have the ability to go in there and say, hey, I can either pay cash for this car or I can finance it at a low rate. And that really makes a big difference on your ability to make a deal and buy a car today. So let's see, if you pay cash for your car, if you have great credit, the interest rates are low, it doesn't really matter, but you go and you say, you know what, I've got the money, I'm going to put it down, I'm going to buy my car in cash. Well, what does that mean? Now, if you buy cash, then if you buy a car in cash, you don't have to worry about interest rate. It doesn't matter if the interest rate is 0%, 10%, 5%, or anything in between, because you've paid cash. You don't have to worry about whether your credit score is really great or not, because you're paying cash. You've got the money to pay for the car, and so it doesn't really matter whether you can get accepted or approved for a loan. It's simple. And if you're worried about inflation, well, you're using your money today. So you know exactly how far your dollar is going to go for you. And it makes it simple. You pay for the car, you know how much your car is worth, and everyone's happy. So that should probably end our conversation today. You should just always go and pay cash for your cars because you have nothing really to worry about. Everything's good. But is it? Let's think about that a little bit. If you pay cash with your car, the one thing we didn't talk about there was opportunity cost. Let's say your car costs $50,000 and you take all that $50,000 and you dump it into your car. Well, guess what? You're dumping $50,000 into a depreciating asset. It's, well, probably not really considered an asset. It's a liability. It's costing you money. Every time that you drive that car and every minute that goes by, that car is worth less and less money. So that $50,000 in 2 years from now could be $30,000, could be $25,000, who knows, depends on how quickly your car depreciates. So should you take that $50,000, put it into your car, or is there something else you could do with that $50,000? Maybe you want to invest in a business, maybe you want to put it in a stock that you really believe in, maybe you want to take that $50,000 and put it in some other investment that's going to yield you a really good return. That $50,000 has an opportunity cost, whether you dump it in a car or put it somewhere else. And so you really need to think about that. Is this the best use of my money right now? Or should I finance the car, use the bank's money and take that $50,000, put it somewhere else? Now, this gets a little interesting because now we have to think about, well, if we take the money and put it somewhere else, we use the bank's money, now we have to take a look at the interest rate. How big is it? Is it 0%? Is it 2%? Is it 5%? Is it 7%? 8%? How much is it going to cost me now to borrow that money? And if I do borrow that money, how much is that going to cost me over the long term? So let's assume that the interest rate is 5%. If you take that money and you go invest in a stock or a bond or a mutual fund or something else, or you invest it in your house or you put it somewhere else that's going to yield a return, you need to make more than 5% on that $50,000 so that you can be above. You can make money off of this deal, and that makes it worthwhile. If you make 5% on your money and you borrowed 5%, it would have been like taking that money, putting it in the car, and getting 0% interest. But if you can make 6, 7, 8, 9, 10%, you make 20% on your money. Now you've made money on that money. So you've used your opportunity cost wisely. You've taken your money, instead of spending it on the car that's depreciating, you put it into something else that's made you money, and that opportunity was a good one. That's made you some money. But we have to think about inflation. When your money is somewhere else, that means that your money is not going to go as far over time. And so we need to think about how much the cost of inflation is as well. And we've got to add that onto the 5% interest rate that we're paying on our loan and think about, will I make as much money as I think I will? And is that going to cover the inflation cost of my money, the cost of my money going down over time, and also the cost of the interest that I'm paying? Both of those things are hitting my money negatively. And so we have to make sure that the money that we're going to make or spend or use is going to be justified, and justified to kind of take over that cost of the interest and the inflation. So you're probably thinking, Yosef, this is really complicated. Why should I not just buy the car cash and, again, not have to worry about all this stuff? And the reason is because you have a lot of opportunities to use your money. And if you're worried about your credit score too, that could also really help you out. If you pay a loan, that could open up a lot of opportunities for improving your credit score over time, and thus giving you an opportunity to get bigger loans later on for when you may want to buy a house, or maybe you want a lower interest rate when you buy a car. So there are a lot of really good benefits to having a loan for your car, but you have to be responsible. You have to know yourself and say, what am I using my money for that I'm not dumping into my car, that I'm going to use somewhere else? If you're just going to rack up credit card debt and spend money on other things and not use it responsibly, that's a poor decision for your money. And you could have been making money if you invested that money in something and gotten a 5, 6, 7, 10% return on your money. And so people who really understand themselves and have a good financial sort of mind, you can use that money, the bank's money, and you can make money off of it. And now that car is actually going to cost you a lot less because your money is now working for you and you're using the bank to help pay off your car. So those are things that you need to consider when you're buying a car. And the other thing is, if you take a loan, a lot of times those companies that are financing you, whether it's the bank that you know or another bank that you don't normally bank with, they're going to offer you really great opportunities as long as you're paying off those loans. I've got sometimes the credit cards coming to me saying, hey, you've been pre-approved for this credit card, or you've been pre-approved for this line of credit. And that means that you can go and have access to more money if you have these loans that you probably otherwise wouldn't have had access to. You would have had to apply for it and it would have hit your credit score. So these are things that are really cool, and if you use them responsibly, could be really good opportunities for other things in life that you want to take advantage of. So in my opinion, car loans are really great if you use them responsibly. And at the end of the day, I think it really boils down to you got to know yourself. And if you're the type of person that spends money a lot and it's really difficult to make sure that you're kind of using your money responsibly, pay cash. Buy the car that's a little bit cheaper or that you can afford, pay cash and not have to worry about it. And it just gives you the peace of mind. There's nothing else that's going to cost you more money other than the maintenance of the car. And if you finance the car and you can use that money to make money, that's a win-win. That's a really great opportunity. So think about that. And if you're that type of person that can finance the car and make money off of it, well, you're in a different league. And that's going to help with a lot of things later on in life outside of just the car. So I hope this was helpful for everybody. It's something that I've thought about quite a bit over the years. I used to always pay cash for my cars because I thought that was the best thing to do. And over time, I've come to realize that if I take the money and invest it, I can make more money that way and also pay for my car. And it's opened up a lot of doors financially for me because now I've got these great lines of credits and credit cards that I can use. They give me points that allow me to go travel and, get money back when I buy groceries and things like that. So it really, really is helpful. And it's something that I otherwise would have not gotten had I just continued to pay cash for cars. So think about that. Again, feel free to share this with other people that you think would really value from it. It was really exciting for me to share this with you and let you in on some of the secrets and probably financial decision making and thinking that goes on before you buy a car. And don't just get sold on the car that the dealer wants to sell you because it's got more features and is a little more expensive and costs you more out of your pocket. Really think about it. What's your budget? How am I going to pay for this? And what's the best way to make sure that I am financially protected so that I can make my dollar go the furthest for me? Thanks again for watching. Have an amazing rest of your week, and we'll see you in the next video. Take care.